Good morning, everybody. This is Mike from ABC123Trader, and I'm going live today only for the purpose to teach you guys some education and trading. There's the markets because of Martin Luther King Day. There's really nothing going on. So I decided to just go live for a while. If you guys have any questions about the indicators, how to use them, what to look for, stops, etc., we can go from there. I'm going to switch it to the next one page, and basically what it says is day trading can be very risky and only trade money that you can afford. I'm not responsible, and this is for educational purposes only. Start up in a couple minutes here. Well, good morning, everybody. Whoever's watching today in YouTube land, I'm just trying to do a video for you guys, a little bit of education on just understanding the markets more. On Friday, I took a little bit of heat, like I said, on a couple of my other videos, so I decided that if I'm going to start day trading, I'll start using a little bit tighter methodologies in order that maybe you guys can take trades as well. But with that being said, I'm going to get into the education one more time. I got to just check if the markets are already closed here. Just almost closed. They're going to be closing in 3 minutes. But if you guys have any questions, I'm opening up the floor for anybody to ask questions, methodologies, what to look for, how to day trade, stops, why I'm doing it, etc., etc. Instead of myself just talking non-stop, because I want you guys to understand how the markets work. And I am spending these hours because I really want to see you guys become consistent day traders. And I do have software out there, and there's some we have a few clients now on the leasing the software. But it's on the long term. If you really listen to what I'm trying to say, is you should be able to become a consistent trader. The hardest thing in trading is psychology more than anything else. If you can overcome the psychology of the greed versus fear, you can become a very consistent day trader. So what I'm going to do is, and I'm actually going to text it. What I'm going to do is I'm going to just put a text here. This webinar, hello Isham, is for education questions. There we go. That's what it's for. Okay. So what I'm going to do is I'm going to try to reiterate this over and over, and I'm going to show you some other of the charts, and we can go from there. First thing, what I'm going to do before we go crazy, I'm going to go in the Discord group, and I'm going to show you one thing. Okay. On the very top, I added a couple of channels. If you guys didn't get the investors pack to download, it's right here. Guys, on the webinar, you can download your webinar momentum panel for free. And what I've done on the weekend, I created all these different templates. Okay. Now these templates will be like my charts of what I've been doing, and also then you can use it for training, etc. So I have an intraday 5-minute chart, morning open, and I'm going to be focusing on morning open today as well. Of course, scalp trader, I'll talk you, the correlation, etc., etc. Down here, I'm putting also education templates. So if I ever create a template for the day, I'm just going to throw it right in here so you guys can learn and practice as well. Okay? So, and also, of course, general trade chat. Renegade today saying, let's see if we see 377 today. I'm going to say, nope. What the heck? So, I didn't really look at it, but whatever. So, this is what I want to show you. And then we're going to get into these charts here. Let's across. And we're going to start from top-down approach again. This chart, I know the ones that have been with me for a while, they don't know what that is. That is a swing scatter. Let me just go into the chart templates. So it's going to be on the daily chart template here. I have it set up. Come on. Just going to move this one back and forth. So this is the daily chart template. And so when I look at it, I always say psychologically, so what I say about psychologically trading is I'm looking for sell-offs majority of the time. From the buy phase, I will look for buying opportunities. Sometimes it takes a while, but she'll trigger in. On the sell phase, if you can just put that mindset in there. Well, this is on daily, but that's fine. From here to here so far, we're up 325 ticks on the 1 a.m. If we switch it to the 15-minute chart, it's probably going to be less because it took a while. Let's go ruler here from the white line to where it is today. Now it's really close, 295 ticks. Okay? So what I do is when I do a top-down approach, what you guys have to realize is where is the market going to go? And the question is, why does it work? Quite often, on certain phases. This one actually did work, and then they responded back, so you could have made your money right there. But why are these phases working? Okay? The banks, it takes them time to accumulate their position, make their run, and cash out. And I kind of found out the harmonics. It's just so cheesy how it is, but that's how I look for it. And so I created I have these timestamps for you guys to say, okay, let's see if these guys are going to follow these patterns. Sure enough, majority of the time they do. Going back, November, right on the money. If we could have taken that run for the election for those 2 weeks, from here to here, 3,000 ticks, boys. Let's say you had 10 contracts on that. I don't think you'll have to be working for the year or two. And so over goes down, goes up. When we're in our right here, this is post-election, and it was still trending up, but we're having so much political disarray in the United States right now. This is why there's no rhythm. After January 21st, we're going to find out exactly what's going to be happening, and we can go from there. Now, the other thing I'm also going to tell you is if you guys are day traders, there are certain days that you really have to watch for, and ironically, it's the 21st. Always look on the third week of the month, or I always say 21st. And the reason why is options expiry day. So every 21st, January, February, March, April, all the way through the 21st of the month is options expiry week. So you're going to get a lot more price action, a lot more volatility within the third week of the month. On the third week of every quarter, March, June, September, and December, and if you really think about it, here's the YM321 here. It usually gets extremely volatile. So if we go to, for example, October 12, 13, 14, 15, 16, 17, 18, here's your 21, 22, they're wrapping up, and away they go. Okay? And if you look at it over and over and over again, let's see if we can find March, April. That's COVID time, so. But still, 6, 7, 8, 9, 10, 11, 12, 17, 18, 19, 20, reversal. There you go. Option expiry, start to reverse. Okay, so you can put that, if you can put that in your, I guess your memory banks, we can go from there. So when you're, like I said, when you start day trading in the morning, like I always said, I have that book that I showed you a few days ago. Just start marking these things over and over again. You'll start seeing the patterns. And then what I do, I switch it to a 4-hour chart because I'm looking top-down approach, always top-down, top-down, until we can pinpoint the areas of interest. What I'll do is, just before market open, I will look at two things once again. Now this template, do 4-hour chart right here. 4-hour chart, okay? Let's go from there, put it back. And so this template will have, I just put the trend cloud, I kept it as basic as possible, the GAN fan, which I will teach you on a separate chart how to use it, and I'll do it right away. And then once I have my markings, like I said, every day what I'll do, just before market open, so I get up myself and I put a horizontal or a vertical line here. Then what I'll do is I'll put a horizontal line on the upper range, wherever this section is, and the horizontal line in the lower range. And this is my area of interest, if it really pushes. Because as you can see on the GAN, how they flirt in areas. They flirt up here. See how they're playing in this zone? Before, they crossed over. This one really dropped to 2 zones. They were flirting with this zone to drop to this one, and then they played. It kind of played in the halfway mark on this one. But if you look at over and over again, flirting with the zones, until it breaks through. Once you get early enough. And then what will happen in time, we'll be reversing those zones. Once we start getting another, let's say, another major sell-off like we did during COVID's time, at the beginning, yeah, it took off. Now, what I'm going to show you is how I create the GAN fan. And one thing I found out in my code, I got to actually contact NinjaTrader. For some reason, I thought it's independent for one chart. If I keep on adding charts, say here, I'm going to do it again, another chart, for example, and I hit OK. Unfortunately, I have to separate the main chart from it. As you can see, I still have these files. So I actually have to make them all independent. So in order to do that, what I do is I'll create a new chart independently. I'll create a YM chart. You could use whatever you want. What I'll do is I'll do a minute, I'll say 2-hour chart for now, just for teaching purposes. You can use whatever you want, and then we'll go from there. Now what I'm going to do is I'm going to close this, not close this, but I'm going to show you the chart. And because we have a longer time frame, I will increase this, let's say, to maybe 90 days for now, so we can get things, let's look for peaks and our valleys. Our last major peak and valley. So on January 5th, I think I have that on the election on this move. This is the way I have it originally set up, so I'm still following it, and it's moving across slowly. So I'll use it as the same example. What you do, you add the GAN fan. And once you have the GAN fan, you'll have these 5 points here. Start point, end point, draw GAN, save file, reset. So when you have it set up, cross, around this time, what you do is you try to line up to the lowest point. There we go. Once you have it lined up, hit the start button, and it'll say complete on the very top. And as you can see, that's our first mark. And what I'll look for is the first move. Let's move this across and see. It could be this first spike, and we might have to use the second spike, but we'll use the first spike. And on those 2 hours, I'm not going to take the peak. I'm going to take the average of the 2 bars. You can try the peak, but I'll try the 2 for now. And then what you do is just click it until it adjusts, hit endpoint, then draw the GAN. Let's see how she's running. So as you can see, even though I took that big peak there, see how it complemented each other over and over and over again? Okay? Now let's take a look at it to see how it's following. Scratch this down. And she's riding. That's possible. Yeah, she's still riding here. We can use this. There's a little deeper retracements. You can have mid sections as well. Okay? So when you're done, you just hit save file and you're good to go. If I ever go to 30-minute chart, and I think data series. And if I go back, I think if I go back to 120, I hit apply, that Gantt chart that you saved is still on your system. Okay? So that's the first thing, what I'm trying to teach you guys. So if you understand how the Gantt works, then what we can do is we use those for projections. And once we do these projections, and because I showed you on this one, I'm not even going to use this chart now. What's this one? Because that was for example. So I already have it set up on this one. And as you said, where did my lines go? I must have deleted them. Oh well. But what I do is I said for the most current time, horizontal line between two ranges, and seeing if it's a runner, let's see if it gets to this top of the area, or if it's a runner this area. This is our play for the day. We will also have resistance because we're going inside this cloud. So you can tell we have this area plus the bottom of the cloud. The reason why I say that is, as you can see where it dropped off in play, see how it touched the tip of the bottom of the cloud? We go farther back, let's see if it did it again. Actually, that one even tried to even go deeper retracement. Let's see. No, we've been running up the upper cloud that whole time. Okay? So that's the beginning of what I do for you guys. So you can understand what I look for when I day trade. And then what we'll have to do is pinpoint it. So the first step, like I said, is I look at my fades. It is a pullback day. I even look at the daily bar, so it says, okay, it might be pulling back today, so we have to watch. Okay? And then what we'll do, oops, I want to stick to the chart. And then what we'll do, I go to the 4-hour chart, and then I also check to see if these times are correlating properly. Okay? So these times, right here, on the time scan, I have it set. I only have 3 indicators: trend cloud, time scanner. I have it set to 1 hour, 1 hour analysis. So every hour, it's just checking the 1 hour cycle. And so they're saying around 7 o'clock till 2 in the morning was a sell-off, and it actually did. If I was up at 7 p.m. the night before, it ran all the way down. And then, as you can tell, because it's Sunday, Monday with the Martin Luther King Day, it's supposed to pull back up. So it is kind of just playing around with this. So if I was up at 5 a.m. Eastern Standard Time, I'd be looking at 5 a.m. sell off to 1. Okay. So, and if you guys have any questions, feel free to ask. This is what this webinar or this education video is about. It's a Martin Luther King Day. There's nothing really to happen. Now, the next thing what I'm going to show you is, and then I'm going to get to the market open here, is this template here. This is the YM 15 minute. I put it on the Discord guide. Do it over and over again, because a lot of people are probably still not used to the Discord. If you get to the Discord, in this chart template, I should be a 15-minute one. Training, intraday chart, Eastern Standard. Maybe I don't have it in here. No, I think I do have it. Summary. One of these. Or if you want all the charts all at once, I have. Let's check here. Chart template. The workspace. Here's a workspace for the same charts. So every chart that I'm showing you guys today, this is all of them. Oh, that's too bad. Too bad, Isham. So anyways, what I have here, oh, this is what I can show you guys for today. I gotta turn this off though. Perfect. One thing I've never showed you guys. I gotta turn it off. I have, which chart is it? First I'll go through these charts, okay, and then I'll show you the other one. I'm using the regular NinjaTrader pivots, baseline, day trend, time scanner, trend cloud, and lead tracker. Time scanner now, I think I set it to 5 minutes, okay? Even on a 15-minute chart. So when I was doing the top-down approach, now we knew on the 4-hour chart there was or on the daily chart was a green bar. On the 4-hour chart said it was selling, and we're seeing pullback. And then now when I'm getting a little closer to the 15-minute charts, as you can see, I broke out of the baseline cloud and I'm above the VWAP. Things are moving back up. So then I have to start looking at all my scenarios saying, how far can I go? Now look what's all here. Day trend is pointing up, saying it's supposed to be buying opportunities. Phase 1 is already buying up. So every time this goes green more and more, it's going to be more aggressive. We have 11:30 to 11:30 buy-in, so there's really nothing happening because of Martin Luther King Day. So everything's pushing up, even though that we're inside the main lead tracker cloud, we're trying to break through. Okay, that's all I'll show for this one. It's basically straightforward. And then when we get into, it's this chart I use. Nope, it's the last chart. Okay. And then what we have here, I'm just bringing you down to a 5-minute chart. And like you guys, you don't need all these charts, but I'm trying to do top down so you can understand how all the harmonics work. And so with the 5-minute chart, if you're a 5-minute trader, what we have is a number of things. We see your support and resistance on high volume. And I'll get into the volumes a little bit more now. As you can see, we have market open pricing. On this chart, I only have one market set to New York time. Okay. As you can see, I have quite a bit of indicators here. Just I don't have to. I'm going to turn it off. So I have fib zones, day trend, volume bars, POC, Williams, time scanner, market maker, market open. Okay. So the market maker is right here. And on Friday, I got burnt trying to play within the market maker, and I should have been in there. But as you can see, what we're trying to do is we know if you look at the correlation, see how the market open price right here from, I think that was probably Friday. Let's go back here. Let's check the timestamp. Yeah, that was the burn on the video, and then I took that one. Okay, so where the market opened on Friday. See how it came back and retested it today at 6 in the morning? And it came down back to this market open. And this line here is the point of control. So it's this indicator right here, so you can understand. POC. So what it is within this zone, if I take for example, a volume profile. Now, if I created one of these volume profiles, this one's a little bit lower, but this is what I'm ranging. I got rid of all this noise, so I have only 3 lines. Okay? So you don't need all that extra noise on the chart. But this starts from the session. So from the Asian session from the beginning, this is where the volume is right now. This is the main volume. This is the upper half and the lower half. So we've been playing around, flirting in that area. Market open, comes back, volume point of control, comes back, flirts with it, back to volume point of control, to the bottom of the 70, flirting with that, coming back, breaking the 70 and up. And we're almost done for today because Martin Luther's wrapping up here. So when I'm looking at this chart, one of the main things I look for, see this number right here? I'm going to really stress it. You guys, you put this in your memory banks. When you see a positive number in the morning, okay, majority of the time it will stay positive. it can do a Fibonacci 50% pullback. So let's say at, I was just going to say non-stop, but 9 in the morning, half hour before open, and I see 40%. I'll see if it will go down to 20% before the bounce. Sometimes it will go right to 0 before the reverse. Majority of the time. Sometimes it doesn't. You still have to look at all the other scenarios. But I will look at that as a really strong bias as well. So if you were thinking about it, we're at 40% here. And at 6 in the morning, maybe this was around, maybe at 0. So we have to see. But what I will do, I will look at always for support and resistance, market open pricing. If I'm doing a day trend, one of my favorite trades is I'll let it come down, try a trade here. If it works out, let it pull back farther, and probably this is the one I'd be looking at because of correlations, guys. See this? This is a market open price line. Let it pull back within this zone to buy in to continue up because we have a green background. It's a green buy trend. This is probably the area I'd be looking at. One of these two areas because I have support resistance from there. So that's one of my trades. When I get to it on live, I will show you if we can ever get to that position during a trading day. Okay. The other trades, I'm going to be creating about four or five trades, and one was Isham's, and I'm going to give him the compliment on that one. I'm using a 5-minute chart for the ATR fib. I will be just letting it ride, always putting a trade within this zone here. Where this dotted line is, I'm going to move this back to about 10 ticks versus 20. So what I'm going to do to show you here on the ATR, just for risk versus reward, I'm going to make it even thicker. I'm going to put this to 10 ticks risk. And make that a 3 so you can see it, and make this a 3 so you can see exactly what I'm looking at. There you go. That's your zone of interest for trading. It's an area that I will like. I'll say a high probability area in order to have a good trade. What you can do, if we look at it earlier, even though we're going against it, we never got into this one. Even though if we got into this zone here, see, we would have, of course, we would have failed to trade way up here, but we're going against the trend. But I want to find one that you can see. There you go, right here. See that? Came down. This is what Isham actually, I wrote when he originally gave it to me, but I added these later. I said, this is the area of interest. So if I can get in here as a limit order, come back in to the 70, the risk versus reward. It's all about, that's the key, right? I just did it wrong. Risk versus reward. See, we hit the 2-to-1 ratio. Or I think I have mine set to 3. Let's check. Nope, 2-to-1. So there's your 2-to-1 risk to reward. So you would have made your profit on that. And if we keep on going over and over again, if we can find them, let's see if we can find one. But there are not that many trades. Most definitely, Otis, I will show you market maker. I'll put a blank chart to make sure that you understand, because it is very powerful. My last chart will have market maker and market open. Let's focus here. There we go. Let's open this up. So this one I have a 10 tick risk, might be a little tight. I might have to open it up. I'll take a look at it. But as you can see, you break it down, boom, break it down, go, break it down. This is 8 o'clock at night. So you guys with the Asian sessions, that's your big move there. But over and over and over again. Okay. Now let's go to the last chart. Now this chart here, this is the one that should be. Okay, the baseline, we have a baseline cloud. We have levels. I gotta do something here first. Perfect. Okay, no problem, Otis. We'll get to it right away here. Okay, there's a thing I created, and I haven't shown on any of my on my shows yet. This might help you guys. Is object trading, and what it is, and I have to fine tune a little bit more, but the generalities is, and I want you guys to try it out on Sim so you can figure it out. Is let's say you have all these markings up, very top. You have rulers. Let's check your rulers. Okay, which means nothing. Your garbage can, get rid of it. But what all these are, for example, if I create a rectangle, and I'm thinking, tired of waiting for the market to break, all you have to do is you create a box like that. Okay? Once you create that box, on the bottom corner here, I know you can't really see it with all my other indicators. There's a word saying rectangle trade type selected. Okay? When you do that, what you're doing is you're setting up the possible trade opportunity that you want. And then when you do that, what happens is you have buy stop here, sell stop, buy limit, and sell limit. So if I'm thinking the market's going to break out of this box, I'm saying I want a sell stop activated. Okay? Now it says sell trade types selected. So now I don't have to worry about it. Until then, until it breaks out of that box, I don't have to. I'm saying I don't have to watch the computer or whatever, and then your trade will be activated. Okay. Now let's say you were sitting there and you said, "No, I changed my mind." All you do is you hit the cancel button. Okay. Now your trade on the bottom is canceled. This box is null. Okay. That's how this trade system works. Now, for example, let's try. So I have it, and in the indicator, and I can do it on this one as an example. Okay, on the object trader, you have to put it on whatever account. So I'm going to put it on Sim here, and then you'll see it on Sim here as well, and then on object trader as well. Oh, I did do it right. Perfect. It will read whatever strategy you're using. So you create your strategies here, you can mix and match them, and away you go. So for example, I have rays, I have horizontal lines, I have boxes and Fibonacci retracements and EMAs. So for example, this EMA, if I click EMA and I go by limit, what I've done on the EMA trade type by limit, it wants to break down. Hopefully, maybe I got it too late on this one. And if it bounces up, it will put me in a trade. That's what the buy limit is. It's not just putting an order waiting for it. I want to see it to come up and reverse. But I'm going to cancel this order because I missed it. And we'll go from there. Now, I'm going to put in, for fun, a horizontal. Is this horizontal? Yeah. I'm going to put a horizontal line right here, and I'm going to go, whoops, sell stop. Hopefully this will work. Also, and then as you can see in the very bottom, it says sell stop activated. If it works, great. Hopefully I can get in the trade and away we go before market closes. Now, the only thing is, the reason why it's farther down, I have it on bar.close. So this one is moving a little too aggressively. I want it, in our regular range. I'll probably get it. My order is filled now. Let's put it to Sim. Here we go. The horizontal line got activated, and now I'm in a trade. So a lot of the times, you guys are doing analysis, and you're saying, am I on the right side of the trade? Am I on the wrong side of the trade? Oh, geez, I missed it. So now you can just drag your objects, have it set up, and of course, there's always, you do all your analysis in one sense. Like, for example, if I originally boxed this one, like this, saying, once it breaks here, away you go. I'm going to put a test such that it will state if broken when touched. Right now it's only on bar close, so this was a big move. But this is what I've been writing for a while there. It took me a while to figure out how to get these objects working properly with it. And so what you can do, let's cancel this. And all I'm doing is when you hit cancel, it will cancel the last current next trade I wanted to do. But you can have also, I've designed Fibonacci retracements. So I have this one set. Let's see if I go buy limit like that. Buy limit activated. So if it hits 61%, goes below the buy limit, the wick just touches it and starts retracing, you will put your order in to go north. And that's how it works. Okay? I'm really excited on that. So that's one of the indicators I added. That was on the last pack. This is on this pack here. Okay? Now, Otis. We're going to get into the market maker. I'm going to drag this over. No, actually, you know what? I can just switch charts here. Let me just switch charts here. Okay. This chart, there's a lot, and I'll create a blank one. Actually, I'll do a blank one first. Notice. So you can understand. Create a new chart. Bring it over so you can see what I'm doing here.
You can go to Walmart, you can go to Costco, you can go to the mall.
Okay, let's just create a YM chart here. This has to be on the wrong side. Here we go. Market maker. I updated the software, so I'm doing the exact same thing with you guys. Okay, so market maker.
Well, I know that they did that here.
The market maker. Now you're saying you're a little confused how she works. Okay. Every session start, the market maker will start trying to calculate where these guys are setting up their position. So day in and day out, see this line? This is your main line. Right here, this yellow line. Okay, that's your market maker. And your projections are this little dotted line with the region. That's why you have all these clouds here, these mini clouds. Okay. Now, when you start seeing market makers like this, we have 5 days of them playing around. Now you can see it's a lot of chatter. Okay. So this one whipped up, whipped down, whipped up, whipped down. So once you're out of this market maker, see we had no previous history till here. See how she fired down? Then she fired up, broke through again, and then we had some other energy here. And we'll add something to this so you'll see. And so you can go up and down. So there's a lot of noise here. And this is where a lot of guys get burnt. But the reason why is look at all this crap here. Now look what happened here. We fired down, came back up. This was that Friday thing. Way down here, come back up. And guess what? Look where we're playing today. This was today's market maker, and we're trying to break our way through. So Otis, you were saying, what is the market? Or that's how you can read the market maker. Now, if it gets too noisy, you can do one of two things here. You can do one of two things here. You can, well, actually, I'll show you something crazy here. If I put in 60 days, now take a look at this. Right to the tick, guys. Right to the tick. That big drop off, we had a market maker sitting there. This is what I'm talking about. Everything is preset. As long as we can find these zones of interest, away we go. Now let's go as far back as possible. See how many. I can understand. I understand. And if this is too cloudy, Otis, for the noise, what you can do, you can actually get rid of your opacity as much as possible, 5% or 0. So it's a lot cleaner. But what I want to show you is stressing the point is once you have these zones of interest for the next day here, and it kept on creeping up the third day here and back down, see how they're coming back, play again, see? Now we got a lot of noise here, so we really have to watch. So we have to really pinpoint our areas of interest coming back and forth. You can see them. They're playing. They're playing. Breaking up from the top, coming back to this zone of interest. Come back to this zone. Breaking here. We can use this as a target. This is target one after another. Over and over and over again. And then, you can see later on, see where the major market maker's price point is? We can see them all. They're right here. This whole range, this 200 point range they want to play around with. Especially right in this zone here. It's all these lines. And then once they break, they do that major drop off. And guess what? The reasons why they go this deep, guys, is they want to knock off everybody. And look at, they hit it literally. I gotta zoom this in because you just can't make this up. It's just crazy. I can't make this up. It's insane. Okay, they dropped off from this peak. You can see they hit the stop, vibrated. Hit the stop, vibrated. Okay, let's keep on widening this up. I need to widen this up so you can really see this. This is crazy.
Another excuse. Yeah, right.
So hit the stop, vibrated. Hit this one, vibrated, came back down, broke through like crazy. See? Full bar, full bar, full bar. Hit it, vibrated, but still they're playing with these ticks and the wicks. Next level. Next level. So there is a little more support resistance here. Let's keep them going, guys. Watch this. Breaking through all these zones. On a couple levels here. But look at this. When they decide to finish all these zones, and when I say you can't make this up, look at that. Literally right on the line. It's rigged, guys. Totally. As long as you can find them. That's why I love a syndicator, actually. But and as long as I don't trade stupidly. You see some, I know you guys see some of my stupid trades. But I know know what I'm talking about on that one. And so that's how the market maker works. Okay. Now when we complement, I'm going to close this chart now. Now this one looks a little bit more noisy. I'll turn off this one. I don't need this for today. So I was thinking this morning I was going to try to do a video trade depending on volume, and after 2 minutes, that's why I wrote these arrows, and there was no volume. Levels? You got to give Jose. If Jose is watching right now, you got to give him a compliment. That was his methodology that we worked on. Yeah, levels work good. It's very conservative trading. So, now, next thing, what we're going to talk about is what I have done. I added a number of indicators, all about market analysis, market open, market maker, market. Now, I'm going to open this up, and I'm going to show you which template I created. And I think I wrote it today. Training to 14 range. Morning open Eastern Standard Time on computer. That's the one I used. All those are available for download for you guys. So what this is, I have market cycle, and we'll get into it. Market maker, which you guys have seen. Market scanner, which is the bottom one. 3 market opens. Okay. Stop out. Market analysis, which are these boxes. time scanner, which we know the times, volume bars, the different colors, and trend track. Okay. Like I said, you don't need them all. I have just quite a bit of noise on this for now. You will understand what I'm trying to do here. What I'm going to do first, I'm going to just increase the market cycle so you can understand what the market cycle is versus the market analysis. On the market cycle, I'm going to put the opacity to 25% for now. You'll see the colors get really bright. Originally, before I created the market cycle, I had the other boxes called market analysis. And what the market analysis is I believe there's 3 parts in the trading day. There's your original breakout day, you know, at the beginning, the high volatility New York session, high volatility London, Asian. There's always high volatility. Then they have the intraday, then they have the close. So, for example, right here, this pink bar right here was New York session open, halfway through the day, and wrapping up the day right here. And I only took 2 sessions. I was mainly interested in the London session and the New York session. The reason why I took London session is I think London session, there's enough volume to preset everything. And then use my New York. I used to call it the New York breakout. If it breaks the white box, this was my trade. Okay, that's how it was originally designed. Then what I added later, and this is quite recently, was the market cycle. And I was thinking, because I also worked in the oil patch, we've always had, as you know, the markets run 24 hours a day. So does the Forex market, basically. And you know, even the futures, they only shut down maybe for an hour just to reset their margins or whatever it is. So in the oil patch, we used to always have, you know, a pre-meeting of, for example, if we're drilling, you know, we're drilling to touchdown to, let's say we're hitting a certain zone in the oil patch, we would say halfway through, how many meters down are we? Let's say we're at 1,500 meters. We're projected to go, you know, hopefully another 1,000, depending on, you know, rock conditions, formations, etc. So I try to use the same methodology on the oil patch as in the financials market. So what this red box entails is, I call it the dead zone. Market's just waking up. They're getting going. And then this is the pre-market of the banks, like the way I did in the oil patch, saying, what are we guys going to be doing today? Well, we need to go from point A to point B. We have $500 million to sell or to move. So they said, okay, we'll get her going. So they play around and then they make their move. They go back up. Guys finish their shift. Okay. Move my screen. Sorry, guys. Let's go back. I'll get to that position again. Wherever I was. Come on, stop moving. So, okay, let's say, well, I'll say right here. We move our way up. Then the guys say, okay, did we complete our goal yet? No, not yet. Okay. So they get off shift, the next guy starts taking their orders, and they move it up throughout the session. The New York pre-sale saying, okay guys, I think we had enough volume for today. Now let's liquidate. And this is just for this example. But I said, okay, and then guess what? Boom, New York session. And that's what they do over and over and over. So within the cycles, within those 3, London session, New York session, everything like that, this is what they do. They set up, position go, set up, position go, over and over and over again. So if we're looking at today, and on Friday, and we know our trending, we can hopefully get within that area. So with the Asian session, They're in the dead zone. They're saying we need to move it down. They move it down, comes back up. London session saying, yeah, we still got to push it down for a while. They push it down. At pre-market saying, yeah, we're almost done here, guys. But we'll still have to move it down. Let's just shake everything out. So what they do is where I took my heat for that day, and then she dropped. And then reversed and finished the day off. That's what they wanted to do. And so that's what the 2 cycles are. Now what I'm going to do is I'm going to turn off the market cycle. And then I'm going to turn off market analysis. Still got lines here. And then, you know what? I'm also going to turn off the market. I'm going to turn off a few of these here. So we can see it's and trend track. I'm going to turn off a few things. I'm going to turn off time scanner. And I'm going to turn off market maker for now. And that's good for now. Perfect. Alrighty. So I turn off some of the noise, but there's a lot of lines here, but that's okay. So what I have here for today, I turned off the options on that, that's okay, is the market open. A lot of market opens. So with the 3 market opens, I have white, orange, and green. The green was the Asian session, the orange was the London session, and the white is the New York session. Okay? I'm actually going to turn off these 2 regions too. Okay? So what we're looking for when we're trading, turn that off to keep it as clean as possible. This was New York session here. Okay? What we try to go for on all these sessions to see if we have any resistance, and it's like the same thing with the market maker in a sense. The market maker, I call it a really good area to really watch, but without it, you go from point A. This trade today at noon for that little move, see how she hit right here? And then now she's pulling back. Now let's look at the day where I got burnt. This pullback, see, I was trying to break down to go down, and then I just said okay, and then it went to this zone, and this was a market maker zone. But see how it came right to the top? And look what we have. We have 2 market opens. We have an Asian market open, and we have a London market open. Now, how far back does this timestamp go? See how it touched here? Let's keep going. So this was January 6th market open price that they're interested to in order for support resistance of yesterday or on January 15th, support resistance plus the Asian. So when this came up and I look at price action with the wicks, I should have done that. It's stupid of me. We didn't have all 3 open. See how she wicked, drop. On Friday, I was expecting it to go down, and I kept on telling you guys, but like I said, I got burnt out. I closed the video, then I took my trades, and I took my profits, and I was green at the end of the day. But, as you can see, we can use these as finding areas of support and resistance, finding areas of where you think they're going to stop. Now, the other thing that we have here, these purple lines and green lines, is called the stop out. I'm going to repeat it again. What the stop out is we were retail traders, and all of us were taught to put our stop above the swing. Well, if we put above the stop above the swing, you know, that makes sense logically. But the banks know that too, so what do? They come back in here, they knocked all the stops out here, drop down, gets their profit targets, comes back up. Remember, we were supposed to put it on the high of the swing These guys said, yeah, they were sweating bullets and saying, you know, I have my stop out there. Well, guess what? They knocked these two guys off. Then they came up a little bit farther, came back down, and this guy saying, these guys had all this probably certain volume saying, okay, the market's going up. Well, we'll knock you stops, come up, and go down. There you go. And that's how it's used. Over and over and over again. And so on January 17th, guess what they were doing? And you can see where the high volume is. We're going to put our stops here. We're going to put our stops here. Later, guys, later in the later trading date. Okay, we missed these opportunities. We're going to put our stop here. We'll put our stop here. Got knocked out, or we're wrong. Okay, we're in the right side of the trade. Comes back in. We're going to put our stops here, and guess what? Goodbye, 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 and guess what? Back to New York Open. Okay, and so using this, if you know where these areas of interest are, now we don't have to trade right here or right here. What we want to do is find confluence. See what happens. Comes back up here. See what happens. See if we're on the right side. Take our profits from point A to point B all the way down. And this one, marking, literally was where I had it that other day. Bring back a different chart here. Drag it over. The 4 hour midline to the tick. That's why I always say, look from top down, see where the longer time frame has higher support and resistance. Longer time frames. Put your projection lines in. Okay. So, and that's how I use the market over and over and over again. And then what I will also do, I try to use a projection map. I wonder if this is set up correctly. Let's just check here. Yeah, that's what I want. Is I want to see if this will correlate with this. It looks kind of choppy, so it doesn't look like it's correlating quite. I will always look for long time frames. Little time frames, really tight time frames I don't like, because then I see chop. But for example, from let's say from 6:55 to 1:20 in the morning, I'm going to do a region here. You just want me to program issue. Anything's possible. Yes, you can. I just have to do a lot of coding, merging, verification. So anyways, from, as you can see, from here to here, there's your move from here to here, from 120. You know you're going to be hitting these stop outs, so you could say, I'm done. I started from 655. Look at where points of interest. Maybe we got that good runner down. Then you just manage your trade, working your way down, seeing where the bounces are, away we go. Okay, so and then if we when the markets, hopefully, after all this inauguration and all this other stuff, this is what I want to see. This red zone. And I want to see confluence. There's right now, it's been so ugly for these past few months, ever since before the election and on. It's just the harmonics are. So we still have to play around for the next, hopefully, maybe a week or two before we can get trading normally again. We never know. Don't know. Maybe there's going to be a lot of violence in the U.S. We have no idea. But as a general rule, if you look at from 925 to 955, yeah, it's 5-minute chart. Let's go to 955 where we were, or 925 to here. It was supposed to go from bottom to top. We peaked out here. It looks like they had the high volume. And should that, yeah, so you got your mark. 600, 730. So 150 tick move. But actually, it wasn't that bad today, I guess, all day I sat there. So, and that's about it for the stream, guys. I just want to try to get you to understand of what to look for. I'll be talking to Jose later. We're looking at 4 or 5 different trading strategies continuously instead of mixing and matching. Because I've been trading long enough that I got a big gut for gut instincts as well. So, but I want to just try to keep it as robotic as possible. So you guys, once you guys get used to it, then you can start looking at different things. Alrighty. Other than that, you guys take care and you have a great day, and hopefully the trade floor will be good tomorrow. Okay, bye.